What's up, guys? My name's Austin, and you're watching Econometrics with Austin. Alright, guys, so first things first, we're going to go ahead and do a market update. Dow Jones fell another 1,338 points today, and it triggered the fourth circuit breaker in 2 weeks, meaning that it fell over 7%, which caused a 15-minute halt in all trade. That was the fourth one in 2 weeks, which is absolutely crazy, and it's now lost all of its gains since the Trump inauguration. So it's lost all of its gains since 2016. It's absolutely crazy in like 3 months' time that it's lost that much value. So currently, as you can see, the Dow futures are up 453 points. And what we've been seeing is we see these huge drops. One day, the futures are up, then we see a big gain. Then we see another huge drop in the futures that overnight from the big gain. And then the next day, another drop in the actual price. So this actually marks the 8th day in a row that we've seen the Dow swing by over 1,000 points. Trump also announced today that Americans will be receiving 2 checks from the federal government, one on the 6th and the second on May 18th. That's April 6th and May 18th. And the value of these will be determined on your income and the number of dependents or children in your household. They were originally thinking like $1,000. We'll see exactly how much they are as more comes out about it. And then another huge story today is that the big 3 automakers, Ford, GMC, and Fiat Chrysler, all decided that they're going to close all of their car factories in the United States. Every single one. And this is going to affect about 150,000 auto workers. So what we were talking about the other day about how unemployment adversely affects the stock market, they're directly correlated. And this is showing you that right now. So today we're going to be talking about the top 10 stocks to buy right now. And also we're going to be talking about a little bit about the oil market and what you can do to make some money there. So first let's talk about the oil market. So currently there's a war going on between Saudi Arabia and Russia on oil prices. And what you're looking at here are the future prices of oil. And as you see, each month and year has a correlated price. And so what I'm thinking, oil's down. It's around $23.75 a barrel right now for April. And a good place to be. This is what you can do on the oil. So go long on oil. Buy oil right now for April. Buy in April. Then pre-spread oil. So December. As you can tell the difference between 23 and 31, it's about a $7 difference pre-spread. And you could short April and have a possibility to make money if the prices drop more. So you're going to make money either way. It's a hedge pretty much. And the way you would do that is you buy April, so you go long April and you short December and you spread. That sets your pre-spread. That gives you you're buying it for 23 and you're selling it for 31. Pretty much guaranteed to make money setting a pre-spread. Anyway, so that's my advice on oil. Is if you're into the futures market, if you're into options, if you're into that stuff, this would be the thing to do. Buy April, set your pre-spread for December, because this oil war is going to have to end sooner or later. Hopefully within a month or two, and we'll see prices start coming back up. But if not, a pre-spread will help protect you against price volatility. So let's get into these top 10 stocks I've got picked. So starting off, the first stock is Dow Inc. We talked a little bit about this last night. So they're an international company with a strong balance sheet, and they're pretty liquid. They're pretty liquid right now. So currently, Dow is down 52% in the past 3 months. As you can see, they're currently trading at $26.44 at close. Their futures are trading up right now. And they're mainly down due to the sharp decline in oil, because they are a chemical company, petrochemical company. So they have some issues with oil in their supply chain and making of their products. And also the coronavirus. But anyways, I think that they're way oversold. Dow is way oversold. This is an international company that has a lot of new products coming. They're in a lot of different markets or industries, and they're way oversold and undervalued. And this is a big one for whenever the market does come back up. For whenever the market comes back, Dow is going to be a big gainer. big gainer when the market comes back. Dow's also, another reason I picked them is that they're currently paying a 10.5% dividend. 10.5% dividend, which is great. So you're going to get a 10% return every year on the stock. Now that can change, of course, due to the coronavirus and everything, but you hope that that comes back in the future. So number 2 is Carnival Cruise Lines. Now I know Carnival is in a really bad spot right now. They're in a really, really bad spot right now. But just hear me out on this one. So they're currently trading at $9.30, and they're down 82% in 3 months. As you can see, their high on the past 3 months was $51.90. And obviously, they've been extremely hurt by the coronavirus. And normally, for me, I would never touch the cruise industry. I absolutely hate cruises to begin with. I think they're gross and boring. And anyways, we don't have to get into that. But I hate cruises. Absolutely hate them. And also, to me, I've always thought they're extremely risky because of something like this. You see the norovirus break out all the time. And it's just been a matter of time before something else comes along and causes a huge disruption in the cruise line industry, and here it is. Or if, we had another Titanic situation, but on one of these big cruise liners, that would cause markets to drop like crazy as well. But I see them as a buy because Trump has pledged not to let the cruise lines fail. And Carnival is the largest in the U.S., and they are also well leveraged with about 4 months of liquidity. And currently, Carnival is also paying a 15% dividend. Like I said, we'll see if this sticks. It'll probably change. But whenever we're done with all this, the dividend should return. The stock price should return, and that's where you're going to make your money buying these stocks. They're way down, but they've got government support, and they also have the outlook that their stock price, once this is over, will return or be close to. So you've got both a big dividend, which might go away now, but it'll come back, and also the opportunity on the upside to sell for a lot higher than the value right now. All right, so number 3 is Halliburton. Halliburton is in the oil industry. They're more on the support side. They help drill wells, and they help with software and a bunch of other stuff. But currently they're trading for $4.61, and their stock is another one, fallen by 82% in the past 3 months. And if you looked at oil, this price for oil has absolutely tanked, and that's what's really hurting Halliburton because they're in the oil business. And I think this one here is a very risky one. It's probably the most risky one on here. And that's because they're in the oil services industry. They provide service to the oil industry. They're not actually in the oil pumping, so they're not producing oil. They're just servicing oil. So as oil drops and less wells are drilled and all this other stuff, as places begin to shut down, it's really going to hurt their bottom line. But they're international and in 70 different countries. So hopefully that will spread the risk, mitigate the risk, because some of these other countries can produce at prices this low. They can't do it as profitably due to their societal costs, but they can make money on oil at this low of a price. So I see this one as more of a buy and hold. Buy it and hold out until oil prices come back up. And once oil prices come back up, you should see their stock begin to move. But they're also paying 11.73% dividend, which is great. But like I've said, who knows if that'll stick. But if you hold out long enough, as oil prices do come back, the dividend, if they drop it, will come back up to this level. It should come back up. So number 4 is United Airlines. Once again, they've been hit absolutely hard. They got wrecked by the coronavirus, and they're currently trading at $21. As you can see, their high this 3 months is $89.70. And they've fallen 76%. Their stock price has fallen 76%. So you're buying a top-notch airline for 76% off. And it's just the discount is absolutely huge. But like I've said before, Trump's not going to let the airline industry fail. And if you purchase United for this cheap, then you can expect to see huge upside potential once this virus is over. Because once the virus moves out, more than likely everything's going to go back to normal. And we'll start seeing record travel like we've been seeing over the past year. The only downside to United is they don't pay dividends, but the upside potential is absolutely massive, so it kind of offsets. All right, number 5 is Delta Airlines. Like United, Delta's been hit hard by the coronavirus. They're currently trading at $23.49, and their high of $62 over the past 3 months. They've lost 62% of their value in the last 3 months. And I'll tell you what really hurt them today. They announced that they've lost $2 billion in this month. That's $2 billion in 1 month that they've lost. Absolutely crazy. And that led to them to lose 26% in value today alone. And that's one reason I say that Delta is a great buy, because they lost 26% value today in 1 day. More than likely tomorrow the stock's going to jump up. So if you go and buy on the open, you could sell or set a stop limit or a limit or something to where, say you get in the morning and the future's already up 81 cents. So say you set it for 24.30 on open. If it bumps up to 25, 26, set a limit for it to automatically sell, you just made money. Delta's a great buy, and it's also one of the largest airlines in the U.S. Like I said, the government's not going to let them fail. So once all this said and done as well, their stock should return back up into the $60 range. That's where it's expected to be at. So there's huge upside potential to this one, and they also pay a 5% dividend. We'll see what happens with that. Probably will go away, but it might come back. All right, so number 6 is Marriott. They're another big one that's taken huge losses due to the virus. Marriott's currently trading at $63.81, and they've lost 58% of their value over the last 3 months. And this is another great buy. Marriott is a well-known international luxury brand, and they're not going anywhere. Marriott's not going to file for bankruptcy. So this dip is just a way to get it half off, over half off, 58% off. And that's why I say they're a good buy. They've got good balance sheet. They're struggling right now, but as this virus kind of clears out, everything will go back to normal, and their stock price should be back up around $150. And they also pay a 2.5% dividend. It's not much, but it's better than nothing. All right, number 7 is also in the hotel industry. It's Las Vegas Sands, LVS. So they're currently trading at $37.68. They've lost 49% of their market value. And the reason why I like them is because they're well leveraged and they have enough liquidity. And just today they announced that they're going to keep paying all of their employees through the shutdown in Vegas. Now, if it gets extended, maybe not. But, that's a great company that they're going to be able to pay everybody. And that shows that they're in a good financial position to be able to do this. And, that announcement today helped them from falling as fast and as hard as the other casinos have. They've outperformed the other casinos when it comes to how much they've lost. And they also pay a nice dividend of 7.73%. All right, so number 8 is Ford. Ford is one of the largest automakers in the world. And as the government demonstrated back in 2008, they're not going to let them fail. And so what happened with Ford today, the reason why their stock price fell so hard today was, like I was saying earlier, they announced that they're closing all of their auto plants. And that led to a 10% decrease in stock today, their stock price. But overall, Ford is the cheapest and safest stock on this list, meaning the less volatile stock. And it's trading at $4.50 per share, and they've lost 52% of their market value in the last 3 months. And to me, that is a steal, absolute steal, that a company such as Ford, that is a very safe company to invest in, has lost 52%. And it's amazing how cheap you can get some really good American companies for. And they also pay a dividend of 12%, which is great because it might get cut a little bit, but more than likely that'll come back as we recover, and you'll be getting a 12% return every year on your investment. All right, so number 9 is Berkshire Hathaway, and this is their Reg B stock. And I'm sure you probably know this is Warren Buffett's company, the stock guru Warren Buffett, the man that picks stocks like nobody else. And it's currently trading at $177.44, and their high of the past 3 months is $230. So they've lost 23% of its value over the 3 months. And although it doesn't pay dividends, I see it as a great investment because it's safe. It's a Warren Buffett. It's his. Pretty much, when you buy this, you're pretty much buying a part of Warren Buffett, is what it is. It's all of his investments. And this is what Berkshire Hathaway is. It's safe. Volatility is really low on it. And then there's also the large upside potential, because a lot of analysts think that, once this virus is over, the stock market's going to explode and reach higher levels than we were whenever all this started. So the upside potential on this one is great, and the volatility is very low. All right, so for number 10 is a special stock. It's one that not very many people can afford. I know I can't afford it. I'm pretty sure most of you guys watching can't. But if I could afford it, I would definitely be buying it. It's listed for the cheap price of $256,300 per share. Now I'm going to let you take a second and try and guess. Guess right in the comments below what company you think this is. Well, if you guessed Berkshire Hathaway, you're correct. It's Berkshire Hathaway, the Reg A stocks. So this is actually the first round of stock that Warren Buffett released a long, long time ago whenever he first established Berkshire Hathaway. And it's one that the reason why it's so valuable is because he's never split it. Most stocks have been split over time. As their value goes up and gets to a certain level, it'll be split into, however many. Like a couple years ago, Bear did a 4-way split. So one stock split into 4 and the value was divided by 4. So you come out equal, but the value is less per share. But he's never split it over all these years, and it slowly and surely just gained value and value and value and value as he's bought more companies and gained value himself. And the number 9 was the Reg B. And the reason why he released that is because he doesn't want to split this one, but he wants to have something that the everyday man can buy. So his Reg B does split, and it stays really low. So this is currently trading at $256,300, and it's lost actually 26% of its value. The 3-month high is $344,970. So I know most people can't afford it, but it's a definite buy if you've got the money. The upside potential is absolutely huge. If you purchased one share and the markets returned to their prices before all this happened, which is what a lot of people expect, you would stand to make $100,000 per share, or a return of 33%. Absolutely crazy the money you can make, but like they say, it takes a lot of money to make a lot of money. And this, that's crazy to spend. You can get a really nice house in Arkansas for $250,000. To spend that on one stock is absolutely crazy, especially one that doesn't pay dividends. There's no return that you get except for how much the value has actually increased. All right, guys, that's going to be it. That's the list of the best 10 stocks to buy with upside potential in this down market. Those are the 10 I think that are going to be high performing once we get out of this funk that we're in. Once the government decides to bail out these companies, whenever all this is released, I think these are the 10 best stocks to buy with both upside potential and dividend yield. But remember, when picking stocks, it's always good to look at how cheap they are. But also remember, there's a reason that they're that cheap. Always look and see how much leverage a company has before you purchase stocks. Because normally, if you're just buying stock day to day, it's more about expectations. But in a market like we have now, where there's a liquidity problem, it's especially important to look at how much leverage a company has, because if they have too much, there's a good chance that they're going to go bankrupt, and you definitely don't want to buy a stock that's going to go bankrupt. Anyways, thank you guys so much for watching. Be sure to leave a like on the video and subscribe to the channel for new videos coming every weekday. Thanks for watching. I'll see you guys in the next video.